So when you started seeing all those global players coming in, the main question for me and us as a company was like, well, how do we compete then?
When is the right time for a founder to sell out to a bigger rival? And how do you do it on your own terms? I just sat down with Ola Doudin, founder and CEO of BitOasis, the first crypto exchange in the Middle East. BitOasis was recently acquired by Indian unicorn CoinDCX. Ola gives an insider's take on the do's and don'ts of M&A and why she thinks crypto is uniquely suited to thrive in emerging markets. We also talked about surviving the lows through the crypto crash, and believe it or not, her early days handing out Bitcoin so people could learn how to trade with it. That might turn out to be the most expensive promotional strategy of all time. Ola, you've been a trailblazer in the blockchain space in the Middle East as far back as I can remember. What trends are you seeing specifically in emerging markets when it comes to blockchain and crypto? Is there anything different that you're seeing in emerging markets relative to the US, Europe, and elsewhere?
So one thing I always say that, Web3 or crypto, so there's different, obviously, namings in the space. It all kind of refers to the same thing from a technology perspective as blockchain. Has better product market fit in emerging markets or developing markets versus developed markets.
How so?
Well, I think if we look in between 2023 to 2024, obviously the US continues being the dominant market in terms of receiving crypto and transactional, I would say, volumes in crypto overall. From a size perspective, the US is the largest, but in terms of growth rates, regionally, what we're seeing is that Sub-Saharan Africa, India, and I would say also the Middle East tops that list. Sub-Saharan Africa has the highest growth rates globally. So I think it's recent statistics is 45% year-over-year growth.
Impressive.
And it's definitely leapfrogging, or I would say growing much faster than developed markets.
What's driving that?
So interesting question, and I've actually been really kind of on a personal level looking at that very closely. The lion's share of this activity is stablecoins. Obviously stablecoin growth is exploding globally. So even in developed markets, it's a much faster way for you to send money cross-border, much cheaper, etc. But what we're seeing is that the percentage of transactional volume that is going to stablecoins or powered by stablecoins is over 50% in developing markets, but it's much less in developed markets. So it's close to 30% or less in markets like the US, but it's over 50-60% in places like Nigeria, across Sub-Saharan Africa, in places like Argentina. So I think that's very interesting.
Yeah, that is interesting, right? It's almost the difference between somebody who's like more speculative as an investment, right, in the US, et cetera, and then where there's an actual use case because of a pain point and need in the case where they're using the stablecoins.
100%. Also places like Turkey, we're seeing that also the lion's share of the transactional activity.
Lots of inflation, et cetera.
Exactly. Is access to stablecoins as tokenized dollar for value preservation, cross-border payments, trade in the sense that leveraging tokenized dollars, USDT or USDC, for the sake of actual utility and not just speculative activity.
BitOasis was acquired by one of the biggest players in India, CoinDCX, recently, which is a little bit of a less traditional move, an Indian player acquiring a player here in this region in the Middle East. What drove that?
I think typically what we've seen in the space is like more US, kind of players coming in and establishing a footprint. I think what was exciting about the acquisition is that BitOasis maintained its brand and maintained its regional, local focus. And that was something that from day one, as part of the conversations that we had with CoinDCX, was also important for them as well. I think they understood the value of local platforms, especially within the fintech, kind of perspective. Users have affinity and they have attachment to local brands. And when it comes to fintech, trust is very important. So having BitOasis as being the first, and today one of the largest, if not the largest, I think from a UAE perspective, is important in terms of establishing that trust from day one and continuing establishing that trust as the brand continues to grow under the umbrella of the DCX or the CoinDCX group. We have similar playbooks as well in terms of how we want to grow in our markets, how we want to grow our brands locally also and expand those and scale those. And I think ultimately our philosophies also matched. And it became almost kind of like a natural progression to be acquired and to be part of that group so we can have the ability and have more firepower to execute in our market.
With the partnership with CoinDCX, it sounds like you had a great relationship with the founders. There's a level of autonomy, access to an amazing platform with more products, a bigger footprint, a great brand on a global level, while also retaining your BitOasis brand and autonomy here and all of these things, which is a great, perfect kind of scenario. But was there a point at which you're like, you know what, I just want to do this on my own?
Yes, I think as a founder, you always have that in the back of your mind, right? I think for me, and probably similar to other founders as well, is autonomy, really being able to go out there, get the right kind of capital, the right teams, and executing as fast as you can. That's some of the joys of being a founder, and I think running a company. I think at this stage, I realize what BitOasis needs. And given the changes in market dynamics and the fast pace of how things are moving in terms of competition, customer segments, the market itself, I realized that was the right move for BitOasis.
That I recall, I know that, both of us sat on the Dubai Blockchain Council in 2016, which seems like forever ago. When this whole space was kind of starting here in the region. But you were one of the only people in the room that was actually doing something in the space. And, that I recall that you always, you took that risk early on. And have you always been this kind of rebel at the leading edge? Has that kind of defined you since you're young?
A year in crypto feels like 5 or 10 years with all the progress and the volatility in the market. I think if you ask my parents, are they surprised that I have launched BitOasis or have taken that risk early on and continued on the journey? They probably say no, they're not surprised. There's an aspect of me that I think ever since I was a child, I was a rebel, but extremely intellectually curious.
What was the most rebellious thing you did when you were a kid?
Most rebellious thing? I was kicked out of school when I was 15.
What?
Yes, and grateful for my parents for really kind of sticking behind and really supporting me in my in that journey, in that crazy phase of my life. I think at the time I was part of a school that was very much kind of focused on academic track record, and really kind of graduating the best kind of students at the time. That was in Amman, and had very little focus on extracurricular / social / cultural, to some extent even kind of political kind of activities. And at the time, I didn't really like that because you're a human being, you're a citizen, you're a student, you're all these things in one. And just having one focus on one area but not the others, not creating space, I think, for students or teenagers at the time to express themselves in other ways was not something that I was very fond of. So ultimately, I just kind of rebelled, and the school didn't really like it. And I think ultimately that taught me a lesson of, you can still create and change systems from within, but in a more constructive manner. But that was, I think, an experience that had a big impact on me. One
of your hallmarks since the beginning was having this very clear vision about where you wanted to get to and persevering through. Mm-hmm. And I think, that shone through more so than ever when there was a huge crash in 2017-18 in the crypto space, at least in terms of prices. And you were still there pushing forward, probably despite a lot of naysayers, right? What gave you the confidence to keep going and persevering?
So that was probably amongst the toughest chapters that I think we had in BitOasis, because at the time, the market was much smaller. We were the first ones, probably the only ones at the time. So I think a lot of people in the space didn't have the conviction that we had, myself and my co-founders. that's the time where you started seeing a lot of companies also pivoting. Some started doing enterprise blockchain, B2B payments, and all of that. But I think for me as a founder, what was very important is to really understand where the real opportunity is, despite the noise and the market volatility. Every financial center in the world will need a local regional crypto player that is focused on building the right market structure, that is a regulated play. And this is a long-term opportunity that ultimately you need to have it in the market to kickstart and scale adoption in any market, Middle East, India, US, obviously you've got Coinbase, across Africa, Asia, etc. Right? So ultimately, I remember the banks at the time started kind of looking at crypto as super risky. So there was a bit of a backlash on that. But then ultimately, it was the perception of the space from the wider ecosystem, the entrepreneurship, I would say, ecosystem, and investors in the region and outside of the region as well. So I think those are the kind of times where you really have to believe in the mission. You really have to believe what you're building. I would say, more importantly, believe in the space, right? Like the opportunity, right? That crypto is going to transform financial services. Crypto is amongst the most important innovations that we'll see, over the next kind of decade or so. Investing in crypto is a viable, as a viable asset class. There's a thesis, behind that. And I think also seeing other markets internationally, how they've grown. Obviously, the Middle East is always kind of lagging behind when it comes to other markets. But what we've seen is that there's definitely growth in other markets, and ultimately emerging markets were following the same footsteps. And later on, kind of we've seen that right in 2021, 2022, kind of onwards, that you started seeing the rise of adoption in emerging markets, and that's really where I think BitOasis started really growing more significantly. I think it was important to kind of stick to the mission. And focus on that versus focus externally on what people are saying or how they're perceiving the space. I think in that cycle, we've seen a lot of companies pivot. So we've seen some really wrong pivots, in my opinion, that ultimately when the market recovered, they lost on that opportunity as well. So I think that's the thing in crypto that is very different to other spaces. In e-commerce or payments, you might be able to kind of pivot, but it's more of a utility kind of space. It's more of a stable, kind of incrementally growing. But in crypto, it's not. It's you have to kind of stick to the opportunity, cycle after cycle. But then at the same time, be focused and laser focused on where the demand is going to come from, and then stick to it. So there's more of a survival kind of play versus incrementally, growing or any of that.
Yeah, what you're describing, I think, is kind of one of the most challenging parts about, I guess, any founder journey, is that you need to really have full commitment and passion for where you're going. So you have your vision of where you're at. But you also need to be able to adjust based on feedback from the market, feedback from smart people, investors, et cetera. And it's that balance, which is just so hard to strike, right? So how do you know which signals to take and actually adjust the business, or just stick to that crazy passion that you had from the beginning that just says, listen, I'm going to block out all that noise and I'm just going to keep plowing forward because eventually it's going to correct.
Yeah.
And I'm sure that you had feedback to say, Ola, this thing is not going to, it's not going to live. You got to, you should just change this. Just make it like a B2B thing, build blockchain stuff for companies. How did you, make the decision to just stick to your guns?
So funny enough, we tried some of those. Right. So we were like, okay, we believe in building market infrastructure. Market infrastructure meaning liquidity, trading, wallets, broker dealers. So kind of the layer where centralized exchange kind of play. So that's sort of the segment or vertical that we kind of play in when it comes to the wider Web3 or crypto space. I would say centralized exchanges continues being one of the most important opportunities in the crypto space. And we look on which crypto players are publicly traded, Coinbase. And Coinbase obviously has similar playbook in the sense that was also market structure. Obviously, they diversified into different verticals, but still the most important part of the business is building that centralized market structure. So you become a gateway for people to invest and trade and use crypto and all of that.
I think one of the things that some of the emerging markets have benefited from has been a clearer or at least more flexible regulatory environment compared to the United States. With now, the election of President Trump and sort of some changes happening, perhaps even within the SEC, do you see that the changes in the US, perhaps towards a more friendly crypto regulation, might have a negative impact on the region? Or how do you see it playing in terms of emerging markets and their advantage versus the US?
Yeah, overall, I see it as a positive move for the space. So I think obviously markets like the UAE, to some extent Hong Kong had a similar playbook as well to the UAE. Singapore is that those are kind of smaller, more nimble jurisdictions that are pro-innovation, that are also highly competitive in the sense kind of attracting companies, talent, capital into the space, have seized that opportunity to position themselves as pro-crypto or pro-innovative regulation or creating kind of pro-innovation environments for a lot of the crypto companies to set up shop. And I think the UAE executed fantastically on that opportunity where they were able to really attract the biggest exchanges or the crypto players into this space. Having said that, obviously the US is a significant market. It's the biggest market from a crypto perspective. So it remains a very, very important market from obviously domestically as the US, but globally, internationally as well. Just obviously the size of the economy, the kind of, I would say, overall the innovation that happens in the market. I think what's going to happen that ultimately, obviously, Middle East or markets such as the UAE and others are essentially going to be kind of looked at as regional hubs where you're able to leverage that to be able to serve kind of wider other markets or closer jurisdictions in terms of closer time zones and being able to take that as a hub to expand into regional markets. I don't see the US setting kind of pro-regulation as kind of taking opportunities from other markets. Ultimately, I think what's happening is that the space is growing.
Growing the pie.
Exactly. In fact, I think also the US having pro-crypto regulation will ultimately drive pro-crypto regulation in other jurisdictions that have trade relations with other, with the US or other markets.
It no longer becomes something on the margins where they're taking a huge risk if the US,
exactly.
the dominant player, is already saying, we'll do this, right?
Yeah, particularly in India, I think also like a US pro-crypto regulation will ultimately spill over as a policy into larger markets that follow the footsteps of the US when it comes to tech regulation.
No, that's a great perspective. I'd like to go to the actual transaction and the M&A that happened, right? Now you're part of a over $2 billion CoinDCX platform. As we mentioned, this is probably a marriage that might not have been so obvious on the surface, but now that you're in there, I would like your perspective on how founders could think about when it's the right time to actually do one of these transactions. And then for your case with BitOasis, what sparked that?
When it came to M&A, where we need even longer term, kind of more capital, institutional capital, my number one goal was to align with a crypto player. Because obviously our space is very different to probably other utility spaces where you have different pools of capital that are familiar with the market. With crypto, it was very important to find a much larger player that is well funded, that obviously has a strong balance sheet, but has very similar playbook to us because they will also go through the same ups and downs
Makes
that we
sense.
would go over.
Makes
But they
sense.
have a long-term vision of what the space is. Obviously, every founder, every company, and every market opportunity differs. And the type of capital at any stage of the company as well, and what type of resources you may need, will differ as well. I think one thing that I would kind of give as tips for founders, one, I think understand your journey and your market opportunity and the mission of your company. And then based on that, understand what type of capital resources you might need at every stage of the company. So that's number one. In our case, crypto is a long-term opportunity. And what we've seen is that the space, especially I would say in the Middle East, Definitely, I think the UAE and Bahrain have executed on the or taken the right steps to set up the right regulatory frameworks. Our opportunity, though, is the wider Middle East and North Africa. And I think when we look at the pace of regulation, because we believe regulation is part and parcel of our mission in scaling BitOasis, growing BitOasis, regulation takes time. So opportunities or like crypto or anything that is more on the kind of emerging tech needs patient capital and needs long-term capital. And that typically comes from institutional play, corporates, much kind of larger companies. So I think as a founder, have that chat with your shareholders and understand what is the right capital and the right, I would say, fundraising model for your company overall to be able to continue growing your company and continue having market leadership and ultimately scale that as the market opportunity unfolds and continues to grow.
Did you line up the investors and other stakeholders around a similar vision about where it leads in terms of an acquisition?
So myself on the board, and obviously we've got our main shareholders on the board as well. We've had chats in terms of how fast the market is unfolding, and then ultimately based on that, what is the right model for BitOasis in terms of how the cap table looks like, what type of capital we need to bring in. And I think that's where we realized that we need strategics. Strategics meaning obviously much larger exchanges or crypto players that find the Middle East as an interesting jurisdiction or an opportunity that they want to have access to, and then ultimately kind of grow that into a potential acquirer or a strategic that would come in and take over the business. So I think at some point, obviously, as BitOasis has grown in the market and as the market started developing, I think we sort of understood that this is a long-term opportunity. And aligning, I think, with your board is very important. We also had international crypto investors that really believed that ultimately you have a first mover advantage. The Middle East is important, and we want to obviously invest in that market. And ultimately, I think we've seen that obviously happen in other markets as well, in CoinDCX. And I think now, understanding how the market is evolving, ultimately, I think a lot of investors in the space as well are predicting a more of a consolidation play to happen to be able to really capture that opportunity and ensure that market leaders in their existing markets continue being market leaders as that space grows more and more and more.
Yeah, this consolidation play of especially players that might be in smaller or more emerging markets to compete against perhaps the giants, the Binances of the world. Is that part of the strategy that now you have with CoinDCX, and what advantages do you think this consolidated regional plays have against a global play?
So I think one of the things that triggered that from a Middle East perspective is that you started seeing regulation and pro-crypto regulation, particularly in the UAE. And then ultimately that starts attracting international players. And with international players coming in, obviously you need to kind of seriously think about it as a regional player. Do I get acquired? Do I go raise more funding? How do I compete? How am I able to kind of tap into all those market opportunities, become a market leader? And obviously that was the point where let's raise money from a strategic, let's get, join forces with a much larger player, and then we can sort of head on compete with the Binances, the OKXs, the Coinbases, because ultimately some of them are already in the market, some of them are looking to expand in the market, but the Middle East is an important market for them. And I think when that thinking started happening, my thought process, actually even early on, because I know the founders of most of the market leaders in other companies, is that we want to be part of a larger company that understands the value of our market, but understands the value of a local brand and being close to the customer. And I think with the several kind of discussions that I had with different, founders or companies, I've definitely seen that in CoinDCX and the founders of CoinDCX. I would say different to other companies where okay, the Middle East may be a market there as part of 10 other markets that we're in, but you're just kind of part of the group. And I think being part of CoinDCX as a group gives us the nimbleness and the agility to be able to execute, but also the autonomy as a local brand to be closer to our customers and continue being close to our customers, but be able to tap into a much bigger pool of resources, tech, customer segments, or being able to diversify to different customer segments, and then leverage the product suite that they have that is as diversified as some of the global players that are coming to the market, but we're able to leverage that and roll it out as a BitOasis product in the market. So I think when we started seeing positive regulatory moves or pro-crypto regulation in the UAE, you suddenly started having all the global players take interest in the Middle East. It is an important market. There's a lot happening here. There's the retail adoption. There's the institutional adoption. So when you started seeing all those global players coming in, the main question for me and us as a company was like, well, how do we compete then? They have much more mature products. They are in all those main markets globally. So do we get acquired? Do we raise money? Who do we raise money from? And then ultimately, obviously, aligning ourselves to a much bigger strategic was the important thing. Like, how are you going to go after and compete with the Binances and the OKXs that are already setting up in the market when we don't have the same pools of capital, we don't have the same kind of suite of products or the ability to execute as fast as they are. And then ultimately, I think when we're like, all right, we need to raise money from a strategic, we need to align ourselves to a much bigger strategic. And I know obviously the founders of CoinDCX, and I know how they look at their markets and their vision in terms of growing, their companies, and other founders that I've known in the space as well. I think for us, it was the right move where we are able to tap into much bigger pools of capital, be able to leverage their tech, their mature suite of products that is on par with some of the other global players, but then still maintain our autonomy and our brand and our closeness to our customers, where we're able to leverage, I would say, the best of both worlds, really, and really be able to compete.
Any do's and don'ts for folks that might be along that path?
Yes. So I think the top kind of tips that come to mind is, an M&A is really a marriage, right? So you really have to seriously think early on who the right partner would be and ensure that your mission and to some extent your company culture aligns with the mission and the company culture of the acquirer. So that's why building those relationships early on is important. Knowing the founders, but not just the founders, I would say, also the management team, because you're not only going to work with the founders themselves. Obviously, the acquirer will be a much larger company than the company that they'll be acquiring. So you really have to have exposure to their wider company, and to some extent, I would say even shareholders and board, if you're able to do that as well. And I think really understanding how the acquirer thinks of your market and the importance of your market, and understanding what type of resources and what type of opportunities and synergies that acquisition with that particular partner is going to unlock. I would say cultures don't have to be homogeneous as much as they do not clash. I think so long as the values don't clash, then I think you have obviously like the right kind of setup there, and then everything else is kind of process structuring and all the kind of stuff. Yeah.
Ola, I'd love for you to put your investment hat on and imagine yourself early career. You've got $10,000 today to put towards some asset. So what would you recommend? And I'd love to then get your thoughts on how the growth potential is of that asset.
All right, so not investment advice.
As Ola, yes.
As Ola, exactly, as Ola. So, I'm obviously a bit biased when it comes to that. So, just a little bit biased. I would say crypto.
Really?
Well, yeah, surprise, surprise. Crypto, I think it's one of the most interesting wealth creation opportunities of our time right now. It is a risky asset, for sure. So, if you're investing in this space, typically depending on your risk appetite and all of that, you also have to do your own homework, and like any other asset, investment out there, But it's one of the most interesting, I think, investment opportunities we have, given the upside and I think the opportunity of growth that we're actually witnessing and experiencing right now.
I mean, we're seeing the crazy growth
exactly,
and crossing $100,000.
Exactly.
And what do you think, if somebody's been sitting on the sidelines, right, up until now, and they're thinking about it, how does one even get in, and what advice do you have on learning about it and what to start investing in?
So I think there are a few things obviously to be aware of. First of all, what to invest in, in crypto. And typically what we find, and that was also, my journey, is that, you go for the larger market cap assets, or like Bitcoin, like Ethereum. Those are the ones that ultimately cycle over cycle have continued to grow and continued to be, valid alternative asset classes, even from a traditional investor, perspective. Ultimately, potentially we'll see the price go even higher than the 100K that it hit in 2024. What you see is that a lot of the allocation is going to Bitcoin or Ethereum in terms of new allocations or new investment kind of going into the space. And anyone who's coming into the space, for the first time, is that you want to go for the larger market cap tokens, Bitcoin, Ethereum, and most of the amount of the allocation is going to, we'll call it kind of blue chip crypto, so maybe we can call it that. And then some allocation that goes to altcoins, which is the lower market cap tokens. There is a lot more volatility, I would say, in those tokens, depending on the tokens that we that coming up in terms of the kind of coming cycle. So some of those are like layer 2 kind of scalability tokens, ZK rollup. Some of them are more on the kind of NFTs gaming space, and others I think in terms of like different categories obviously that we see. So there's new kind of category of tokens now coming up, which is kind of more like AI tokens. So those are blockchains that are solving for specific kind of AI challenges.
If folks are looking for outsized returns and willing to take some more risk, where do you go to learn about which altcoins to actually go into and to weigh the risk and benefit?
So a lot of this obviously knowledge is online. I think a lot of that research is not really centralized, I think, in one place. Obviously you've got data analytics also websites for like investors that want to get into the space, that are crypto specific, that have on-chain data that you can actually look at, and then also price data from different exchanges and trading venues. So I think the knowledge is out there for whoever actually wants to do that research, but it's not really centralized in one place.
And there's a lot of noise. There's a lot of noise, right? So how do you filter the signal from the noise?
If you want to get deeper into crypto and then start allocating capital outside of the blue chip ones, you need to build a thesis, right? And then ultimately kind of figure out which categories within, crypto, outside of, Bitcoin is gold and kind of gold 2.0 and, all of that, potentially will have the highest growth. So, kind of smart contract type of blockchains, layer 2 blockchains, and, some of the categories that we're seeing in terms of gaming, in terms of NFTs, etc. So you need to kind of build a thesis on where you think the next growth is going to come from a decentralized application perspective, scalability perspective, and then based on that, kind of look at what are the top blockchains that are playing within that field. Look at some of the historical data, on-chain price data, liquidity, adoption, how many applications that are being kind of built also on top of that particular blockchain, any kind of security vulnerabilities. You have to build as an investor with continuous research, really continuous research that you have to continue doing. And then based on that, pick the top ones, I would say, based on every category. So institutional investors obviously don't do that. They'll go for crypto funds, right? Liquid crypto funds, where they allocate that investment to those funds. But for your retail customer that wants to build a portfolio, the information and the data, and I would say how to build your crypto thesis is out there. It does need continuous research and self-education. But that's, I think, part of the joy of really growing your knowledge and specializing, in the crypto space when it comes to that. It's very different to investing in stock, but it's also not random, because a lot of people come in and say, oh, it's like gambling. But in any space you go into, you have to educate yourself and you have to build a thesis. And then based on that thesis, you start investing. Sometimes the thesis can prove correct, sometimes it proves wrong, but ultimately, that's part of the investor journey.
And of that $10,000, how much would you put into more blue chip, like Bitcoin, Ethereum style, and how much would you put in an altcoin?
If you're someone who wants to put that 10,000 and sort of like, I don't say like forget about it, but be a bit more of a passive investor, then you definitely want to allocate more into the larger market cap tokens or the blue chip ones, which is like Bitcoin and I would say like Ethereum. Again, not investment advice, but that's typically what we see with retail investors that are coming into the market that wants to have some exposure, but ultimately not become kind of active investors, right? So
that makes sense. So if you're just going to set it and forget it, go for the blue chips.
Yeah, the safer
but
bets.
But if you want to get into this and be actively managing it and seeing what's going up and down, then you can allocate more of the portfolio to.
Yeah, but it requires you to be more of an active investor at that stage, yeah.
Do you see decentralized finance as a direct challenge to the traditional banking system, almost like in their face?
I think that's an interesting question. I would say DeFi has been obviously growing cycle over cycle. I still don't think it's at a stage where you're seeing direct disruption at the scale of traditional financial systems or banks. The challenge today is more on the regulatory side of things, I would say. Having said that, the way I see it is it could be a challenge, but there is huge complementarity when it comes to banking, because ultimately what banks are looking for is to leverage that technology to either digitize some of their kind of back office processes, provide more access, more efficiency, more transparency, and cost reduction. So I think there's two scenarios really. The scenario where you leverage DeFi for having much kind of more efficient, seamless, perhaps FX swaps, or some of the banks, I think investment banks we're seeing actually experimenting when it comes to that technology, or leveraging DeFi for some streamlining back office processes. But then ultimately you also have almost like a parallel financial system or a financial system on the periphery. That is growing, be it kind of DeFi lending, DeFi derivatives, providing much faster or deeper liquidity when it comes to trading some of altcoins that are not directly available in the market. So you definitely have this kind of like decentralized financial system that is almost growing on the periphery. We see a lot of that still being leveraged for trading, or crypto traders that want access to loans, or access to kind of more like flash loans, and access to like decentralized derivative markets for some crypto that may not be kind of available to others. But I still think it didn't kind of hit consumer scale.
Will it?
Ultimately it would, and I think the vision of a lot of those
basically replace banking as we know it today.
Would it replace banking as we know it today? I think the banks will still play a significant role. They are depository organizations ultimately. And ultimately you need regulatory oversight, clarity. I think in the long term, in the long haul, blockchain and crypto, be it in the form of DeFi, tokenization as stablecoins, because stablecoins is a form of tokenization as well. Ultimately, you'll have tokenization of real estate, tokenization of treasuries and bonds, and all of that. Bitcoin as an alternative asset class, and some countries are talking about building Bitcoin reserves as well. Potentially, that would become currency reserves. So ultimately, what you'll see, and the way I'm sort of seeing some of those patterns growing, is that you definitely have alternative markets, or let's say financial infrastructure that is growing outside of traditional banking. But with this cycle, what we're seeing is more and more of an integration. And you need both worlds, traditional finance and blockchain-based, Web3 finance. Decentralized finance. I mean, there's different, obviously, namings to it, but it all leads to the same. ultimately you need both to come in to hit consumer scale, global scale. So you have billions and billions of people kind of using it versus 100 million or a couple of 100 million, kind of fragmented here and there, if that makes sense.
Yeah, it makes sense. I mean, it sounds very practical. And has that been a perspective that has sort of evolved over time?
Definitely.
So did Ola the Rebel have that perspective in the beginning?
Yeah, definitely. Very interesting question. I think one of the things that really pulled me into crypto is that democratization. We're building kind of systems outside of the traditional, systems and all of that comes, the thrill that comes with it, which to some extent, the root of it is still that.
The Ola that got kicked out of school, right? This is like the...
Exactly. It's like you're disrupting systems and you're building new ones that has better access and more democratized access and all
What
of that.
killed the dream, Ola? What killed the dream?
The dream is still there, but I think ultimately when you start building and then you get to a point where you need to hit scale, that's where you sort of understand that ultimately you have to work with stakeholders to build sustainable, resilient systems that are adopted by millions, 100 millions, and billions. I ultimately kind of hear more talking about the crypto space in general. And with that, it's like you have to walk together, right? You can't work separately because you're just going to keep hitting walls, right? But ultimately, if you're going to dismantle those walls, you're going to have to work with all stakeholders in an ecosystem.
Take us back to the early days of, pre-BitOasis even, when you were doing meetups, here in Dubai, trying to get people together who had similar points of views. Tell us about what sparked BitOasis in the very beginning.
Feels like decades ago. I was just going to say, a lot happened since our first meetup. Our first meetup, I think it was in 2015, Impact Hub in Suq al-Bahar.
We were in Dubai Mall at a co-working space.
Exactly. Yeah. We were, I think, probably amongst the first adopters of crypto at the time.
How many people were there at the time?
So we were thinking that maybe 20 people would show up or so. I think we had over 100 people.
Interesting.
And it became more of not a meetup, it actually became more of an event. And the number one question people had at the time was, how do I buy Bitcoin? I mean, it was really only Bitcoin at that point. I think even kind of ETH wasn't really traded and all that. And I think ultimately that's how BitOasis came to be. Is that
straight demand? It's basically you got 100 people in the room and they're all
and they all want
I want to buy it.
Yeah, I remember at the time I was kind of giving people Bitcoin just to kind of try it out. Probably the most expensive giveaway right now to kind of think
you
in retrospect.
You were handing out Bitcoin in 2015.
Not one Bitcoin, but kind of fractions. I think it's for people to try it out.
The fractions. How much were you handing? What kind of a fraction were you handing out?
I have no idea. Probably the most expensive giveaway.
Painful memory.
I think I did some Bitcoin purchases at the time as well, and I'm just kind of thinking in retrospect, probably the most expensive purchases ever.
Well, what fraction of a Bitcoin did you give?
No, they were really kind of
really small. Okay.
Yeah, I'm not really
sure. $1,000
I don't even remember.
Yeah.
But it was me, a couple of my. We were really teaming up on meetups at the time, and then we were talking about, okay, well, there's a lot of people that want to buy crypto. And how can we help them to do that? There's no way in the region you can do it. And not just that, if you're going to use the international platforms, it was really Bitstamp, Coinbase, some of those guys obviously at the time, Kraken, it's painful to get KYC'd. That's if they're even going to look at your application because you're coming
so
from
even
the Middle East.
Applying the know your customer process, they will not accept a typical investor from the Middle East.
And they wouldn't accept also bank transfers, from the Middle East. So there was really no way for people to reliably buy crypto and be able to, trust kind of platform. I mean, you would have done it peer to peer, where you meet someone, and to some extent, some of that's still happening in some markets in the Middle East. So that was the idea of
Well, on one level, I mean, it seemed obvious because you literally gathered people together and they were just clamoring to buy Bitcoin, and you're thinking, sure, we can facilitate that, right? So there's a captive audience, demand driven, you're solving a pain. But on the other hand, you're crazy early in a nascent market that still is not regulated, lots of question marks. What pushed you over the edge to say, you know what, I'm just gonna make this my mission?
In retrospect, I think I was very excited about the opportunity. I think there's an aspect of every founder journey where you have some aspect of naivety. And if you didn't have that, you would have not started.
That resonates with me, yes, very much so. I think the naivety in the beginning, you don't know what you're getting yourself into, and it's probably for the best, right?
It's probably for the best.
Yeah.
Yeah, sometimes, and I often tell like founders, like, you know what, don't figure out everything from day one. It probably would work, like it'd be counterproductive if you have known everything you need to know starting out. So sometimes it's really kind of spotting the opportunity, being early, understanding, obviously your customer, and then go for it. And then, things kind of happen. For us early on, it was really a survivor's game, I have to say. And to some extent in crypto, that's very relevant. You have to kind of survive cycle after cycle and come out the strongest.
Was there a single mentor who really shaped kind of your journey? If somebody who kind of helped you along the way?
Several, I would say. So some of that is like our early backers, Fadi Randour from DCG, Barry Silbert. So there's like several, obviously, that early on really shaped, I would say, my vision of how to build a business in the Middle East. I mean, obviously, referring here to Fadi Randour and the fantastic, amazing journey and impact that he has in this space, but also other crypto players in the market.
Yeah, I mean, Fadi was early one of the, like, let's say, grandfathers of entrepreneurship in the region, founder of Aramex, one of the big shipping companies and logistics companies in the region. I think everybody who was early here has some story about the impact that he had. I remember in 2009, I brought a group from Stanford Business School to visit the region, and we stopped in Dubai, and he was super kind, gave us a couple of hours of his time and give a presentation about like the entrepreneurship ecosystem, and he ended up even investing in one of my classmates' companies.
Wow, fantastic.
So just he's not just a talker, but somebody who actually puts some money behind it. I think that really helps in the evolution of an ecosystem.
Yeah, definitely. I think we need more people like that in the region. I mean, those are some of the things that myself as a founder, as I progress in my own journey, definitely want to give back, create impact.
Where do you think in the next 5 to 10 years we're going to see the direction of this space and BitOasis's location within that?
So price aside.
Price aside.
Yeah, because obviously there's all those kind of different crazy predictions, but also like price is a function of the adoption of the asset as well.
Yeah.
I think that's where you're going to start seeing interesting use cases really come up from crypto, because what we've seen is that you've had kind of the blockchain layer, kind of layer 1, layer 2s, which are more kind of focused on scalability. So there's kind of higher number of transactions, easier way kind of to transact. Now there's obviously kind of more blockchain innovations to create more like kind of abstract layer where your kind of newbie crypto user doesn't really have to kind of deal with the complexities of the blockchain itself. So there's all those different kind of innovations from a protocol level that is happening that essentially will help founders and builders build easier to use decentralized applications, right? Or like crypto applications that will go out to the masses, be it in the form of payments, stablecoins, gaming. So we're seeing a lot of innovation, blockchain-based, games, newer innovation happening in terms of decentralized social, media platforms. That there's an innovation in terms of having an identity online. Ultimately, that will help in voting systems, building blockchain-based voting systems. We're definitely seeing a lot of innovation and adoption happening on the institutional side of things.
Where do you see the killer app for blockchain in this next 5 to 10 years?
Hard to predict. I think there's a lot of innovations in those verticals that I've just mentioned, be it payments or DeFi, banking, gaming, NFTs even, right? So tokenization. So the thesis that I have there is that every asset that we have, physical or digital asset, at some point will be traded and will be transacted on a blockchain. Now, ultimately, how we're going to get to that vision, there's a ton of work that's happening on a protocol level and regulatory level as well. And centralized exchanges will play a central role, obviously, when it comes to unlocking some of that value. But ultimately, from a real estate, be it real estate, be it equities, shares of companies,
art,
exactly. Digital real estate. So there's a lot of that obviously happening more from a gaming metaverse kind of perspective. will be transacted on a blockchain, will be traced on a blockchain from a transaction perspective, will be bought and sold, traded, and value as we know it will be changed, or our relationship to value and ownership will be changed, as part of that. I think what we're seeing as a killer app, at least in this cycle, is really stablecoins and the growth of stablecoins for cross-border payments. So we're definitely seeing that happening. We've been talking kind of about that in crypto since years ago. It's happening now as we speak. And now in terms of other kind of verticals, I think DeFi is really kind of prime now for further growth, because ultimately you need the stablecoin, right, to kind of power those transactions. So we're seeing some of that as well. Remittances as well, cross-border payments, yeah.
What excites you most about the future of blockchain?
I think from day one, still is the case now, which is building more inclusive, open financial systems that allows for bigger participation of consumers, users internationally, particularly in emerging markets, I would say. So I think that's been exciting for me from day one. It continues being exciting. And what sort of new business models that might be unlocked and companies that might be built in markets that probably didn't have that opportunity in previous, I would say, tech innovations.
And Japan had its first crypto IPO with the CoinCheck recently. When do you think we're going to see something like that in the Middle East?
Well, the IPO market has been very busy in the Middle East as well, right? With Talabat's IPO. I think it's bound to happen. When and how, hard to predict. We definitely need more regulatory maturity, I would say, in larger markets in the Middle East for that to happen, particularly Saudi, Egypt, perhaps as well, for that full Middle East opportunity to be unlocked.
Great. I'd like to wrap up with a quick fire round of questions. What did you do with the first crypto that you bought?
I bought coffee in San Francisco. I found the cafe in San Francisco that sells coffee for crypto, probably the most expensive coffee that I bought.
What do you estimate it cost you in today's bill?
I don't even want to think about it. I was so excited that I could do something in my crypto. Little did I know the price was going to go up that high.
This may overlap, but the stupidest move you made with crypto?
Selling some of my crypto at some point, I think. I don't think I've ever regretted the buy. I've always regretted the sell.
Your biggest fear when starting BitOasis?
Ultimately it's failure, really. But I have come to learn that failure happens, failure meaning company that kind of shuts down, right? So in my mind, that's failure, not like kind of doing a product that doesn't get a top. I've come to realize that failure happens when the founder gives up, not when you have the wrong product, or provided that you're agile enough, obviously, it's really when the founder gives up.
One word to describe crypto's future?
Inclusive. Yeah.
Worst advice that you've ever received?
It's not going to work. Don't try it.
And who do you think Satoshi Nakamoto is?
Oh my goodness, I have no idea. I feel like it became irrelevant, really. Yeah.
Well, thank you, Ola, for joining me here on Money Moves.
Thank you, Muhammad. This was a pleasure. Really nice to be with you.
Ola believes that the future of blockchain is in the tokenization of everything. Would you tokenize your assets? Let me know in the comments.